Welcome back to The Exchange. The consumer discretionary sector touching a record high today before pulling back a bit as the holiday shopping season kicks into high gear. Ulta among the top performers, up more than 3%. But my next guest recently downgraded the stock, saying the inflection in beauty that the street expects next year, that's unlikely. Joining me now to discuss that, as well as what to expect from holiday spending, is Carden, analyst at William Blair. Dylan, good to have you. Okay, well, why isn't the beauty surge coming in 25?
John, thanks for having me. I think it's a two-legged sort of thesis here. The first is, in the more medium term, if you look at other categories that have seen bigger growth coming out of the pandemic, eyeglasses, pet, furniture, their subsequent contraction has been about 2 years. Beauty spent about 2 years growing at 10%, a category that has historically been sort of a mid-single-digit grower. You just started seeing softness in the category really kind of around spring of this year. The estimates for Ulta, we think, embed effectively a inflection by the first quarter of next year for flat comp, right, down from sort of low single digits in the back half of this year. I think taking a cue from some of these other sectors, it could be a little bit longer of a recovery, even accounting for the fact that beauty tends to be a more durable space.
Okay, so the holiday shopping season, at least as we tend to traditionally think of it between Thanksgiving and Christmas, 5 days shorter, I think, than last year. It's the shortest one we've had since 2018. You say you don't think that's much of a problem, but let me push on that a bit, because the consumer's been strong, but spending on wants versus needs has been relatively weak. So does that put retailers in the position of perhaps having to discount more than they want during this season and crushing margins?
I mean, look, discounts have always been kind of the name of the game around holiday. I guess our thinking around less of an impact from a shorter Thanksgiving to Christmas period is that for the last decade plus, you really have seen the predominant trend being buying closer to need, right? So, I think there are some sundries and some certain categories maybe where there's sort of less of an impact or more of an impact as far as sort of demand, but not in apparel in our view. There's a lot of mixed messages out there right now as it relates to kind of the overall demand environment. You certainly saw weather impact in September, hurricanes rode into October. A lot of the off-price retailers noted that kind of corrected in November when temperatures changed. And then you had Nordstrom coming out yesterday talking about a deceleration in late October, early November. If you look at some of the inter-quarter demand trends, you certainly saw a much softer November, particularly in the beginning of the month. So I think there's just a lot of extenuating circumstances out there between weather and the election. The underlying demand trends, though, are relatively positive. And you've had 2 years now of real wage growth. So we think all else equal, and read between the lines of some of these prints, you are seeing a relatively resilient consumer.
So I'm hearing that the return to physical stores is a big trend this year, but at the same time, Amazon's trying to get us to shop from the couch during a football game on Black Friday. So which retailers, if there is a return to the physical store, but also omnichannel is strong, which retailers are best positioned?
Yeah, and you just have to account for the fact that apparel is now 50% online, right? I mean, I think a lot of people got used to the 2016, through the beginning part of the pandemic when there was still in the early days of online migration. The reality is you have a much more mature online channel, at least as it relates to apparel. Companies like Abercrombie are already relatively split evenly between their online and their retail businesses. Torrid is similar. I think companies that are more aligned with that type of balance in their assortment, in their channels, are better positioned to see essentially what's going to become a much more harmonious relationship between the two channels.
What about what about discounters like TJX?
They've ignored the online channel. I mean, Ross famously got rid of it in February of 2020. For them, that model works, right? I mean, they've been extremely successful in getting people to come into stores because the assortment is changing over every other week. So I think, again, there's still 50% of the industry that's being done in stores. To your point, there's still a lot of value-seeking behavior, and the experiential and value prospect of both of those retailers can't be matched. So there still will be room for the retail channel. But we'll see, and my view is that online or the off-price channel could be ignoring the online channel over the long horizon.
One dark horse name for this season you think might do well?
I think if you're looking for danger, I think, Torrid and J. Jill. Both of these names have been kind of thrown out. There's definitely been some disruption in, the weather impact we talked about earlier in the quarter.
Okay.
But I think the underlying demand trends are still there.
All right, sounds good. Dylan Carden of William Blair.